Hey everyone, this is Bill. Welcome to the channel. In this video, in the midst of a historic bear market, we're going to be talking about stocks. Limited on time and focused on the beginning of the college football season, we haven't produced a video on stocks in a couple of months, but we wanted to visit the topic today, so thank you for joining us. Now this is a very challenging environment we've been in. First, there are significant geopolitical pressures, which are not being dealt with very effectively. There are significant supply chain and energy issues, with self-inflicted wounds in both arenas. But more importantly, we have excessive domestic inflation being battled by the Fed by rapidly tightening interest rates. None of these issues are met with a positive reaction on Main Street. None of them. Now everyone knew inflation was hot as a firecracker, all while the Fed continued to tell us it was transitory, and they continued asset purchases, raising no interest rates. Then all of a sudden they had to raise interest rates rapidly. Now remember, too many dollars chasing too few goods is the short version of an inflation definition. So meanwhile, while this is happening, right out of the gate, the newly elected Biden administration got a huge inflationary stimulus package passed, which was unnecessary. Same with the recent inflationary action of forgiving portions of student loans. This all adds to inflation. So with inflation continuing to rage, the Fed began their open market operations, initiating a series of significant interest rate hikes. These hikes increase borrowing costs and assist in hurting the profit margins of many companies. If the hikes are excessive, unprofitable companies may be restricted in obtaining the necessary capital that they need to continue operations. And more importantly, the consumer becomes harnessed in their ability to purchase goods, adding to bloated inventories, potentially decreasing company profits. All of this trickles down to a retracting economy and a deflation in the stock market value. There's a lot of wreckage out there, so in my judgment, it appears the market is inching closer to a bottom. Now, we have not seen the normal panic capitulation that typically accompanies a bottom, but we're not out of the woods just yet. But it certainly seems the downside risk is lower than the potential upside gain. In my analysis, I have always considered charting an important factor in the evaluation of markets, and in particular, individual stocks. Now, if we zoom out and investigate a chart of the S&P 500, we can see we have support in the 3,500 range, with the market now attempting to revisit this previous high, which I consider typical price action. Now, it is worth noting geopolitical and economic conditions are currently inferior to the time of the previous high, so we need to take that into account. But this is the area I'm focusing on now for the low of this bear market to be posted. With sellers exhausted, we typically need a catalyst, though, to move higher. And one thing that's coming up that could provide that role is the upcoming midterm elections. A few years back, I did a video stating that if there were some kind of a market crash, I would be dollar cost averaging stocks that I liked all during that time period. I will link to the video in the description if you want to check it out. But dollar cost averaging is exactly what I have been doing, and I have sold very few positions during this bear market. As a long-term investor, I'm in it to win it. So here is a short summary of the stocks that I have been dollar cost averaging over this period, which range from solid mature companies to a few emerging companies that offer high risk, high reward. But before we move on, please note that we are providing our opinions for educational and entertainment purposes only. We're not licensed investment advisors. So with anything you hear on this video or on this channel, please perform your own due diligence before acting on any material derived from our content. Thank you. The first stock that I'm dollar cost averaging is perhaps my oldest holding, the Coca-Cola company, which I've been dollar cost averaging for decades. I did a video on this stock a while back. I'll post that in the description for you if you want to take a look at it. Now, Coke is near all-time highs, and it does pay a decent dividend, so I'm all in the Coca-Cola company. Next is Disney, another company I've owned for decades. The company had it rough during the pandemic and has made some questionable political decisions which have weighed in on the stock. But it's on sale in my opinion, and I continue to buy. Another company I dollar cost average is WestRock. Now, I did a video on this company, which I will link in the description also. The Atlanta-based company deals in packaging and also pays a very nice dividend, so I'm sticking with WestRock. I dollar cost average Tesla. This stock has been perhaps buoyed by the recent split that they had. Now, I remain very excited about the future of this innovative company, and I look forward to much higher valuations as time marches on. I continue to dollar cost average Intel Corporation. Now, the performance of this stock has been quite disappointing in recent years. The position does not represent a significant part of my portfolio, but although I have considered selling it, I think at this point I'm just going to continue to add at these great sale prices. I've owned Intel for a long time. Just going to stick with it here for the time being, but getting some great low prices right now. I also dollar cost average Bitcoin. Man, I really believe in this technology, and I think the role Bitcoin plays in our future will continue to rise significantly over time. So I continue to stack coin purchases, and I've been doing this a while. I'm loving these low prices. Oracle is another stock I dollar cost average. The company is a powerful tech player and is applying their expertise into the healthcare environment, as noted with the recent purchase of Cerner Corporation, another company that I did a video on recently, which I'll link to in the description if you care to review. The future is very exciting with Oracle, and I'm very excited to be adding on a timely basis through dollar cost averaging to this stock. Speaking of healthcare related companies, I dollar cost average Teledoc. Now, this company is very interesting to me, and in my opinion, it has a wider net of total addressable future market than most investors think. But this is a risky one here for sure. But I'm adding to Teledoc. It's not a large position in my portfolio, but I'm adding to it. I'm excited to see what they've got going in the future and look forward to much higher gains down the road. Microsoft is a stalwart company that I also dollar cost average, already having fingers in most all emerging pies. With their existing businesses and the magnificent checkbook they have, they can instantly factor anywhere, anytime. Count me in on Mr. Softy. Just a few weeks back, returning from some live college football action, the big M on the side of the road met my growing stomach as I was southbound and down on I-75. Folks, you can't go wrong with the world-famous McDonald's hamburger. Now, when I purchased, I felt a lot better knowing that I'm a partial owner of this old great company, and I dollar cost average McDonald's once a week. Now, John Deere is involved in fertilizer and food, which will really rise in importance in the future. Deere utilizes emerging technologies in this arena as well. Now, they pay a nice dividend and a widening future. It makes it a very attractive, and that's why I dollar cost average John Deere. Chip maker Nvidia, another company I did a video on, which I'll link to in the description, has gotten killed during this bear market. But this might be the top company to own in the future, and they're heavily involved in many key products that are used as an integral part of many companies. So I'm happy to be dollar cost averaging in this gem. Man, great prices. I'm loading up. And my last dollar cost averaging stock we're going to talk about today is Enterprise Products. This is an energy play, and energy is in the sweet spot right now. This dividend company, EPD, is strong in natural gas, which is extremely important right now and will be moving forward. So I'm really happy to be dollar cost averaging into Enterprise Products. Well, folks, thank you again for watching. We'd love to read your thoughts on the companies we're dollar cost averaging, or if you've got some great ones that you might dollar cost average that we should maybe know about. There's a lot of great companies out there that you can participate in these types of programs on. So now, as we conclude, we certainly would appreciate it if you like and subscribe to our page, like the video. Really would appreciate that. You can follow us on Facebook at Future Breakout for additional content. But folks, thank you so much for watching, and we'll look forward to seeing you next time.